Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on the shipping sector, we'll look at DRYS, GLBS, DCIX, and ESEA. So the one thing technical analysis tells us, obviously it's a great trading tool, but we can look back and see what the history has done. And we know that the shipping sector has been in a very clear downtrend. We had a huge short squeeze that had big time gains. And unfortunately for many, these big time gains are nice and flashy and attract headlines, and they sucker in a whole bunch of novice traders that don't really know what they're doing. And then the trend resumes itself with the bears in full control. And all you need to do is look at the longer term time frames and see that this has been nothing but a downtrend. And even with the huge move to the upside, it's just a short term pop and another lower high in the long term downtrend, and then the downtrend resumes. So after that 5 days of incredible bullish action, it's been nothing but downside with short pops along the way. Obviously, there's going to be short pops because you can't go down forever. But if you are trying to make money bullish in this shipping sector after this breakout, you can see that we pretty much get one opportunity for the bulls maybe every 10 days or so. So pretty much a 10% chance that we're going to have a green day on these shipping sectors since that pullback has started occurring, which obviously stacks the odds against being able to make profit being a bullish trader in this sector. So here we have a couple pops on the way down. We had a bullish reversal candlestick, a gap up open and profit taking, bullish reversal candlestick, gap up open and profit taking, and then since then we had another gap up open on Wednesday and now profit taking. So pretty much gap ups are not runners like they were on this little 5-day pop. It's a chance for profit taking, and we're now seeing the bears back in control. We're looking down at the low that we've seen here for DRYS. That level is 351. Bulls must hold that level and form a higher low, but we're struggling to hold any moving average support and certainly struggling to turn around this trend. At this point, we would need to break 615 to see some higher highs and a potential reversal of that trend. So we are a long way away from that occurring, about a 50% move from where we currently stand. The bears are absolutely in control of this sector. There is no disputing that, no denying that. And look at the weekly chart. Bullish reversal candlestick rejected from the middle Bollinger Band. Huge follow through, tons of profit taking. No confirmation of the bullish reversal candlestick. Couldn't turn the middle Bollinger Band into support. Bears take over. Then 2 weeks ago, bullish reversal candlestick. Could not confirm it this week. Close at the low of the week. Bears are all over this sector. So 351, the only hope for the bulls to hold to try and see some short-term upside. We look at GLBS. It's holding up a lot better. So you can definitely compare these individual names, and we can see we still have some higher lows here to be looking at on GLBS. I'm looking at $5 psychological, and we did dip below that and close below that. So we are now seeing lower highs and lower lows from this last pop, but we do still have a couple higher lows here. We started down 175 or so, higher low at 250. Now the bulls need another higher low above 250 to try and maintain this little uptrend attempt. So you can see compared to DRYS, very clearly a lot stronger. Didn't have as significant a pop with insane gains, but it is holding up better on the consolidation. Resistance, you can see the same gap up, selling the gap up scenario. 640 and 679 would need to break to try and resume the uptrend. So 250 key support, and you can see how these psychological levels are coming into play. 250, $3, nice round numbers. Weekly time frame, you can also see how much more bullish it is because we do have a bottom back in early 2016, and it has been higher lows and higher highs since then. So another comparison to DRYS, where we've had nowhere near that bullish action and nowhere near anything resembling any kind of uptrend. So GLBS here rejecting from the 200-week moving average resistance multiple times. That very clearly is a strong resistance going forward. We did not confirm the bullish doji from last week. We closed at the low of the week, and we're pretty much in a channel. So the breakout, we rejected from the 200-week resistance. We pulled back. We bounced off the 100-week support, rejected from the 200-week resistance, and now we'll see if we head back down to the 100-week support down at 334 with the middle Bollinger Band there as well. Comparing to DCIX, also very weak, but we do still have a support level here as well. Looking down at 296, the low of this consolidation, gap up, profit taking, and now trying to hold that level of 296. It's a little double bottom. If we break that, our only support is down at 209 and 203. So bulls really want to hold 296 here and see a break of 349, which was the high of that bounce attempt. And again, it's all about forming higher lows and then breaking some of these lower highs that continuously form. We look at the weekly time frame for DCIX. It's right there with DRYS, with being incredibly bearish. Since back in 2011, it's been nothing but a waterfall to the downside. Short-term bounces, lower lows, lower highs. No sign of the bulls anywhere in sight. Tons of profit taking on that bullish week. Only thing the bulls have to go off of here is low $2 support. And last, ESEA. Also holding up on the daily time frame. We have a key support to watch, 185. Bulls must hold that level. We do have a couple higher lows, 104, 141. Make that 135, and then 185. So resistance is the highs of these gap ups that were met with profit taking, 274 and 297 in order to resume the uptrend for the bulls. We need to see big bull volume, and we see it plenty of times. It's just very short-lived, and this is going for the whole sector. You know, one big day of green volume doesn't do anything to reverse a trend. We need consistent green bull volume, higher lows and higher highs. So the weekly time frame for ESEA, all kinds of rejections from the upper Bollinger Band. We are trying to turn around this trend. We have our low, bounce of the high, higher low, and now we need to resume this uptrend and get back above. I'm looking at this key 250 psychological resistance. You can see we had all kinds of rejections from it in the past, and rejections again here. We could not ever close above it. We actually did close 1 penny above it here, but very clearly that price is resistance. If the bulls can turn 250 into some solid support, we will be looking for a potential trend change on the weekly time frame. So GLBS and ESEA are looking the best on the weekly time frame, and DCIX and DRYS very clearly much more bearish on the weekly time frame. So bulls, I've said it all already, need to see consistent volume, turn around the trend, higher lows and higher highs. But again, if you are trying to trade this sector, you're either holding a bag and in the red, or you are being very quick in and out and locking in that profit when you have it, because very clearly swinging bullish positions overnight anytime in the past 6 weeks has not led to any kind of upside unless you're selling the gap open the next day, which has occurred 2 or 3 times. So we'll see how it continues to play out. Definitely worth keeping an eye. This is the kind of sector where I'll just keep an eye on the weekly trends and see if we are getting some bullish upside. But other than that, I'm not interested in playing these little one-day pops. Too hard, and the odds are stacked against you as a bullish trader. Now, bears have been loving it. If you are shorting these names, there's all kinds of movement to the downside. You just need to be cautious because there are scenarios where there are short squeezes. We certainly saw a huge one, and when the bulls come out of nowhere on big volume, it can trap the shorts. So stop losses are essential in both directions. I appreciate you watching. Happy holidays to you and your family, and we'll see you soon.